Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hello Lauren.
Hey Curtis, everybody.
Hey Lauren, I thought we would do a timely episode as of the taping of this episode.
Right.
It's the first day of the government shutdown.
That's right.
Which is the big news media story.
Yes.
And I thought it was interesting, I saw an article in today's USA Today talking about how the stocks have historically shrugged off previous shutdowns.
Right. There have been a lot of them. I didn't realize that.
Yeah, since 1981 there's been 11 of them.
11.
Relatively short, but the most recent two have been government shutdowns for 5 days and for 21 days, so longer.
Okay.
So if you look at all 11, the month, leading up to the shutdowns, with all the talk about it in the media and how it's going to be so bad for everybody, pretty much the average returns have been flat.
Oh, interesting.
Like maybe minus 0.1%.
Okay.
And then during the shutdown, again, the stock market returns as measured by the S&P 500 have been pretty much flat. Okay. I mean, one of them there was like a down 2%, the other one was up 2%. I mean, but on average it's flat. The interesting thing is after the shutdowns were resolved, then the average return for the next month after was plus 2.5% for the month.
Okay.
So what's your takeaway from all this? Dave?
Yeah, the markets don't really care that much.
It's all been factored in, I guess.
Right.
In the
Yeah.
prices.
I think the shutdown, the primary issue with the shutdown is if you work for the government. Right. And you either have to work without pay, which many people do. Not Congress people; they still get paid.
But political now.
Yeah, but many other people either have to work without pay if they're considered essential, or if they're non-essential, considered non-essential, whatever that means. Then they just go. So for them, it's a big deal. For the markets, though, I think that these are the sorts of things that the markets just sort of assume that some stuff like this is going to happen.
Right.
Along the way,
Now they do say that if we fail to raise the debt ceiling, that we've about 2.5 to 3 weeks from now, that'll be a real problem for our credit rating. So, okay, well, we don't know what's going to happen by the time you see this episode, but we hope it's relevant. And thank you very much for watching this episode of Erickson TV. Bye now.
See you next time.